Hello everyone, welcome to the Hedges Academy. In this today video, we're gonna teach you about the double correction WXY, which remained in the previous session of the Elite Wave course. In previous Elite Wave course, we teach you about the emotive wave, the impulsive wave, and the correction waves. So right now in this video, we're gonna cover the remaining part of this Elite Wave course, which is WXY, the double corrective waves. Let's get back to the chart, and we'll try to implement the Elite Wave as well in the live charts. As you can see here, before starting, we need to learn the rules and the Fibonacci relationship along with this WXY corrective wave. There is a combination of two corrective structure labeled as WXY. WXY basically consists of double corrective structure. For example, if you see something like this, ABC as a corrective move to the downside, and then you see a three wave move to the upside like this, and then like this. So that is your WXY corrective wave, which is consists of double corrections, double correction waves. That is, you can be known that this is your WXY correction is happening here. Wave W, X, and Y subdivision can be any corrective structures. For example, it can be flat, it can be expanded flat, and it can be regular zigzag. WXY is a 7 swing structure, like you can see here. 1, 2, 3, 4, 5, 6, 7. That is your 7 swing structures. The rule is the third rule is 7 swing. If there is no 7 swing, then it will be not be the validated WXY. One consists of ABC consists of 5 wave, which is 1, 2, 3, 4, 5. Then 3 wave to the upside, like the wave B, ABC, and then 1, 2, 3, 4, 5, this C. That is your 1, 2, 3. And right now we are doing the downtrend WX correction. So in the downtrend correction, you can see ABC to the upside. That will be count as a 1. Swing 1. It won't be count like 1, 2, 3. It will be count like 1, the whole 1, because we are in the downtrend, and that is a rule that in the downtrend, the impulsive corrective wave to the upside will be counted as a swing 1. So that's why we are counting as a 1. So this is 1, 2, 3, 4, 5, 6, 7. Okay, so that is the rule number 3. The fourth rule number is this example is flat zigzag combination. Right now I'm working on a flat, but it can be like the normal ABC zigzag, double zigzag could be normal, but right now it is based on the flat. Okay, and the Fibonacci relationship is pretty simple, like wave X is equal to 50% or 618% or 786 or 886 or 85 of wave W. This is the wave W. Okay, I'm gonna teach you how. And wave Y cannot pass 1618 of wave W. Wave W, like here, you see, when we count the wave W for using the train-based Fibonacci, when we count this, the Y should not go below 1618. That is the Fibonacci relationship. Okay, as per the wave X, I'm gonna show you how. Why? Because you're gonna see this one, the point, starting point of the wave W, and the ending point of the wave W. Okay, then you see here 786, 886. That is the last point of should be the point for wave X. Okay, the main point is point 50, which is 0.5. I can show you here. 0.5. Okay. First is 0.5, then the golden ratio here, and then 786. These are the levels. These are the ratios that you're gonna be looking for when you are watching for the wave X. Okay. After that, for the wave Y, here, okay, wave Y should be, the last point of interest for the wave Y should be from 1236 towards 1618. That is the last point for the wave Y. Wave Y should not be overextended below 1618. So that is the key level. Okay, like you can drag it towards here. Okay, this is the last point. Okay, most of the time it reverses from 1236 Fibonacci ratio and the 100 of the Fibonacci ratio, the 101 extension, you can say. The 101 extension, in the previous video we teach you already what is 101 extension. The whole measurement of this wave 1 is equal to the next wave 1. That is called your 101 extension of from the top to bottom of the swing. So in this, I'm willing to teach you that this is the high probability target, and the second is 1236, and the overextended is 1.618. Okay. Now there is the second type of WXY correction, which is consist of 3 corrective waves to the downside, 3 corrective waves to the upside, and like this. Let me just show you here. This is right now the 3 corrective wave ABC. Okay, what happens is simply, you can see here, WXY. In this WXY, what usually happens is WXY is always consist of three wave, unlike the wave A, which is consist of 5 wave down or 5 wave up, 1 2 3 4 5. But usually in W and X and Y, that is always consist of 3 wave, A, B, C. Okay, simply A, B, C. A, B, and your C. When you see 3 wave, 3 wave, 3 wave, that is be known as WXY. So it is also known as W. Okay, what happens? Sometimes price action gives you 3 wave down, 3 wave up, then 3 wave down, and people get confused that it is not ABC, so W is invalidated. No, W is not invalidated. That is a second scenario that it can be consist of 3 wave up, 3 wave down, unlike 1 2 3 4 5 and then ABC, then 1 2 3 4 5, like you see here. 1 2 3 4 5 A, then ABC, then 1 2 3 4 5. So basically it could be consist of ABC, 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 WXY. So this is the second scenario. Right now you have learned exactly all the rules and Fibonacci relationship and the double corrective wave of WXY. WXY always implement while you see double correction in the price action. So these are the fine details that you have learned in this video about WXY. So we are not going to discuss furthermore because this is the end of the topic now. What is the next step is, like I teach you here, WXY. Similarly, we can see something here like this in the wave Y. Triangle C, D, and E. That could be the triangle that you can see in the corrective move of the wave Y. You can see like this. That is also be known as your wave Y. Okay. Sometimes it happens that is the W, X, and Y make the triangle correction, the complex wave of the, the complex structure of the corrective wave, also be known as your Y wave. Okay, I just need to draw this exactly to the low here, because it's not supposed to be that much at the higher values, higher degree. So I'm just gonna drag it to the downside here, like this. Okay, so similarly, you're gonna see something like this. That is also be known as a wave Y. So this is the end of the topic. I have shown you the scenarios 1, 2, and 3 for the double corrective wave for WXY. Basically, what happens? This is a typical type of the correction wave, and usually what required is practice. Once you are doing practice on all of your charts and doing paper trade based on this, and practice makes the man perfect. So once you practice this WXY spotting into your stock account, stock charts or forex charts or crypto charts, when you practice it, and you can also use the help of the indicators such as the Lux algo, or we also have, like here you can see Elite wave. Yeah, this one, Elite Wave Lux Algo, that has also been useful if you are doing Elite Wave analysis. It can help you to understand if there is any, WXY or any of the structure. Basically, I use it very, very, very rare, because if I want to know the starting of the wave one, motive wave one, I use this to confirm that is the wave one or not. Rather, for the further counts, I don't use it. If I want to know the further counts of 2, ABC, if I want to know the further count of motive wave 3, I don't use it for that. I just use it for the confirmation of the wave 1, starting of the wave 1, which is helpful for this. And also there is an indicator by trading view, that is Elite Wave chart patterns here updated. You can also use this Elite Wave indicator by trading view, but that is only available for the premium accounts. For your support, you can use it as well. So now we will try to do some analysis for Elite Wave. There's a simple analysis right now, just for your explanation. As you can see here, on the higher degree time frame, and on the higher degree counts, this is 1, 2, the lower higher low, and the higher highs, the impulsive motive wave 3, and that is your 4, and that is your 5, impulsive wave 5. Why I'm counting this as 5? Because some people are saying that it could be 5 like this. You see, this is also valid. This is also valid, but the B wave, if this is the B wave like this, then it is valid. Then it is valid. Right now we don't have much developments and the price action of the chart, so we can't say that is the confirmation of the flat, expanded flat of the wave B as a correction. So right now what we are watching here is simply the wave 4 and the wave 5 as a count here, you see, because our wave 3 is validated in this whole scenario. We can see here 1, 2, 3, 4, 5. Let me just show you here. Four and 5. That is why I'm more leaning towards that is the wave 3 here. and this is the wave 1, 1, 2, 3, 4, 5. As you can see here, 2, 3, 4, and 5. So that's why I'm more leaning towards that is the motive wave 3 and the motive wave 5. And that is also corrective move to the downside like A, B, C here. You can also do for example, you can also do 2 counts. One is based on this, and second is based on the like this. There could be a 2 counts for this scenario. If you are more leaning towards the corrective bias, that this is your corrective move happening right now. But the expanded flat is going through, you know, a lot of to the upside. That make me worried that it is going a lot of to the upside. So you know, it should not be like doing this B wave a lot to the upside. This is more than upside. So that's why I'm not leaning towards the flat, but it could be possible that it's not invalidated right now. So you need to understand the rules and theory of the corrective flats to understand the validation and invalidation. The invalidation is if it you know, if it goes more to the upside, that is the invalidation of the expanded flat. But it is valid right now. If you see a nice dump to the downside, for example, like this, if it's something like this, that is then I will be leaning towards more towards the corrective wave to the downside, as in terms of wave C, which can be consist of 1, 2, 3, 4, 5, 5 wave to the downside. Okay, 1, 2, 3, 4, 5, like this. 1, 2, 3, 4, 5. Okay, that can be retest the lows here, and the when we teach you in the previous rate wave course that 3 wave, 3 flat categories. In that category, I taught you already that the expanded flat should not go below the wave A. Okay, like this. That is, you know, that is called the flat expanded. The C of the expanded flat is always to the starting of the A wave that I just teach you earlier. So right now that is the count I am looking for. Or just try to put this ABC here now like this as well, or maybe to the downside like here. 1, 2, 3, 4, 5 ABC. Right now, let's implement the WXY count, which should be, if I can find the 3 wave structure, 5 wave structure, 1, 2, 3, 4, 5. A, B, C, flat, that is your W. Then X should be below this, and ABC. As I told you, the ABC, so that could be your WXY. Yes, here we go. W, X, and Y. How are we gonna confirm this X? By the help of this. Starting off the W here. Now you see here, this is the target 0.5618, and exactly it is respecting. Sorry, my mistake. Yeah, here we go. Log scale. Oh, sorry. Hmm. It's front running the point 0.5, so it's making me. That's what I'm looking for right now. Okay, now this is pretty good now. My On the log scale, I was like unchecked this. This was disabled, so I just remember to, if you are doing the higher time frame elite wave count, always check the log scale and always check the Fibonacci levels based on log scale. Exactly. Now you see here, the point 0.5 is respected exactly to the dollar. This is your perfect W and X and Y. Mm, you see here. Now, if you want to validate the Y wave, you are going to exactly using the same technique that I just told you about the 3-wave count for the by the help of the train-based Fibonacci extension. Here you see. Yes, exactly. This is pure gold. Like we just learned that most of the time, as I told you, most of the time, 101 extension respected for the wave Y, and exactly you see wave Y is respected exactly to the 101 extension. It doesn't mean that it cannot go beyond this. It is also can go towards 1618 as well. But most of the time, market makers use this strategy to move it from the 101 extension of the Fibonacci ratio. So you need to mark these levels as a high probability area one, then 1, 2, 3, 6 second probability, and third probability is this. So then how you can trade really well, else you will be confused that why it's moving front running the wave Y. Okay, so from the Fibonacci theory, we just backed our WXY that has been validated WXY, and now from the count subdivision of this WXY is could be typical and could be complicated for you, but we'll try to make it easier, like uh, 3-wave down like A, 1 2 3 A, and then B, and then C flat. Okay, that is your flat ABC. The flat, remember the flat. If I can show you the flat screenshot here. Just for your understanding, let me just open it. Okay, here we go. So which one is this? This one. See, flat ABC. Okay, similarly we see here the example ABC. Okay, and there are your W wave, and now the X wave for it is simply 1 2 3 ABC 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 ABC. One, two, three. Uh-huh. 1 2 3. Oh, that is tricky part, yeah. But I'm sure that is the X wave. But the tricky part is either this is WXY because that is consist of 3 wave, but it is not showing me the 1 2 3 4 5 wave. If I just do this ABC like this, for example, okay, then I'm confused right now, and you will be too. But that counting of the one, the wave A is always consist of 5 wave, 1 2 3 4 5, and it could be leading diagonal as well. But here we see the count is not matching because 1 2 3 4 5, yeah, high probability that this is based on the leading diagonal, uh, leading diagonal like this. That is, if that is the case, then the valid count for this is acceptance of wave 1, 2, 3, 4 to the acceptance fourth wave into the wave 1. Then it is your valid leading diagonal. Okay. And in leading diagonal, wave 5 can be lower than wave 3 as well. Yeah. Then the wave B here, A, B, C on the lower degree time frame. And then we can see C wave here, 1, 2, 3, 4, 5. 3, 4, 5. That is your wave C. So basically this is the valid count, and after that we see impulsive waves to the downside like wave Y. This is the tricky part. Again, you need to go to the lower time frame to count the subdivision of this wave. No. Yes. Now here we go. While doing some more analyzing the chart, I come to know that that is your ABCDE here, and you see WXY is validated here, and as you can see, this ABCDE triangle has been forming here that we just ignored previously. Now I just come to know after doing some more analyzing and more practicing on this Y wave to make it validating point. This is ABCDE that is also valid. I already told you that in in this video already, that it could be the Y can also be consist of the ABCDE triangle to the upside as well and to the downside as well, like this. So this is the perfect scenario happening here. In terms of Y, it is also validated, and it exactly break out from this triangle to the upside. So yeah, this is the validating, and also backed by Fibonacci relationship. That is your 1-on-1 extension. We give the bounce from this point.